I think it's an easy way to trade. And that's a lot of what I'm going to talk about. I'm going to talk about that specifically in the classes coming up, is just kind of doing real simple swing trades using the spreadsheet and some basic indicators. It's not stressful. You can, you do small positions, nothing that's going to wreck you.
2 weeks. 2 weeks from today, that will be starting. High-level mentoring classes. The 31st is the first day, so set your clocks. Good morning, everyone. Dan here with Tradingology.com in the trading room for, what do we got today? August 17th, 2021. Good to see you guys. Happy Tuesday. As usual, we do have Dave joining us from the Strong Market team, so good to see you, Dave. We'll let him get settled in and set down and get the doors opened up here. Good morning, sir.
Morning.
How was your weekend?
Weekend was good. Weather was beautiful, but it looks like you're sending us some rain today. And
yep, I had to do it. The lawns need it though, so we're gonna help out the grass.
Okay, that's not fair.
We definitely need it here, that's for sure.
Farmers need it too. So
yep. Looks like the market could use some watering too. It looks like just looking at the internals here, we're opening up negative. It is creeping back up, but we still see volume is on the downside. But take a look at how that's related to the indexes themselves. Big gap down on everything, but it's sitting right on 4 EMA right there. It's kind of riding on it. We'll see if that lasts or not. Interesting. I was looking at. Oh, go ahead.
It's almost the mirror image of yesterday. We had the exact same thing. We gapped lower and we recovered and we went 100 points higher on the Dow.
So. Yeah, we set a new all-time high on both the Dow and the SPX yesterday.
Yeah, you can't keep this market down.
Yeah, look at how far it was. At one time, this was a big, huge red candle. Everyone was freaking out in the morning.
It was.
And we do see there is some bearish herding that is joining. That is, but they're not letting it stay down. I don't know, it's underlying pinnings of it or what's happening there, because we do see at the close, I was watching this yesterday. If I zoom in, there was a lot of buying that did happen at the end of the day, whether that was coming in there. So there was a lot of buy orders that closed the market yesterday, which pushed it higher. That was around the same time that it hit those all-time highs. So always keeping an eye on that for what's the underlying internals doing, because it was really odd. Last week we had a few days where we had negative internals, but yet the markets are going higher. That usually doesn't equate to one equaling the other. If you have things going down, the price of the index should go down. But then you were mentioning there's ways that can get massive. If there's a few that are keeping it up, that you don't really see the drop starting to happen, right? That's it's one of those, how do you equate what you're seeing? It's the only way that it's possible is if you have an index of 30 or 500 and the majority of them are going down, but one is still going up, one can override the rest of it, right? There's ways of actually seeing what's making up that entire index and why things are doing what they're doing.
Yeah, the S&P 500 is a weighted index. So you've got like Google, Amazon, Facebook, some of the big, the heavily weighted stocks, because they have huge market caps, are really kind of masking what's going on in the underlying market. The majority of stocks yesterday were down. Let's take a look at the spreadsheet and take a look at those numbers, because I think it was about 1,100 up to 2,100 down or something like that.
Yeah, 1175 to 2131.
Yeah, so I mean, you had almost twice as many stocks going down as you had going up, and it's those big stocks, those heavily weighted stocks, the Amazons, the Facebooks, et cetera, and Apple, and those stocks that tend to push those indexes to new highs. But a lot of the small caps, especially in the IWM, are declining rapidly. The IWM is more of a indicator for the Main Street economy, because they all tend to be US-based companies that kind of read what's going on in the real economy. And IWM, I mean, if you take a look at the longer-term picture, they have not made new highs. They've been kind of in this trading range for a really long time now, and it doesn't look like it's making any progress to the upside at all. Yeah, I mean, it's just been going sideways really since, wow, how long ago? Since February.
Yeah, that's when we spotted the Head and Shoulders earlier, and then we had the drop, and then it's kind of went sideways since then.
Yeah, it didn't make that breakthrough to the downside, but it's just been going sideways. But if you look at the S&P 500, you mentioned making new highs, the Dow made new highs. I'm not sure what the NASDAQ is doing because I don't follow the NASDAQ that much, but I know that's probably kind of making new highs as well.
Yeah, that's not far behind.
Yeah, it's not far behind, but it's the IWM is the one that I kind of keep track of. And I have been trading the futures contracts on IWM. The M2K is more than any other contracts or futures at this point. Tom has joined us. Good morning, Tom.
Yes, Tom's representing. Yeah, just to compare, let's see, this was the 5th. So 12 calendar days ago, the NDX made an all-time high. It didn't quite get there yesterday, but so they're all within a week or two that those three have had all-time highs. But like you mentioned, the Russell has not.
Yeah. So we tried to bounce a little bit here on the Dow, but we're back down around 275, which, when you think about it, 275 used to mean something, 275 points, but
right
with the index at 35,500, it's not even, it was at 0.5%. Yeah, well,
the 0.75% on the futures, diamonds alone are 0.75% down at 353.
Yeah, I mean, the last time we had a 1% move would be over 350 points. We were down 333 points or so yesterday, which is about 1% maybe, or almost 1%. But we haven't seen a 1% move in a long time on the indexes. So
one thing that we did spot out that was interesting, as you were mentioning about the spreadsheet that we see, is 2 days in a row now, market timer supply demand index. Actually, 3 days in a row. I correct myself. 3 days in a row, we had more selling than buying. -2, -2, -9. All 3 days went up. That is the institution selling on the markets advancing. That is not a good sign.
Yeah, selling on the advance is one of the indicators that we look at when we're doing, swing trading, kind of general analysis of the market. We also had some bearish herding yesterday, even though the market was up for how many days in a row? 1, 2, 3, 4, 5, 6 days in a row, we were up. And actually 9 out of the last 10 days we were up. And we had very little bullish herding, which is unusual because usually when the market's going up like that, we see lots of bullish herding. But it is not well formed. It's very spotty. We only see a couple of touch points there where we see some bullish herding, but we got some pretty good bearish herding, yesterday, which is very, very odd because the market's been going higher. So there's a lot more sellers coming into the market.
Yeah, the buyers are the retail people, that's for sure. Looking at the majority of what's happening. So be careful out there. It's definitely, we're not the doomsday people. We're just saying this is what the data is showing. This is what's actually happening in the internals of the market. There's more selling happening than buying, but the price goes up. That should be a red flag. Pay attention.
Absolutely. Because the internals can lie for a little while, but they can't mask everything. That's why we do the bullish and bearish herding to show you and kind of give you a visualization of where larger traders are on, which side they're on. And it's clear that they're on the selling side of it now.
And we saw that yesterday as that supply demand index was actually over 10. So there was definitely, when that selling was happening, that's what was pushing that down. And then they quit selling and there were buyers at the end of the day. So there was the reversal because we see today it's lower than it was yesterday. We were down, the whole day looks like 7, but then today we're sitting at -3 right now, currently 2.9.
Yeah, I don't think there's anything in the market to really get excited about right now. I mean, what is the big thing that can generate positive sentiment about the market and the economy in general? What's the big thing? We've got housing prices at all-time highs. We've got interest rates at all-time lows, or pretty close to all-time lows. They're going lower today. We got the 10-year heading down. We're at, let's see, we got the 30 years down a little bit. So, you know, not a lot to get excited about here in just about anything.
Yeah, all those yields are down, pulling those up. Just looking at the gaps on the indexes there. The news, obviously, they always have to have a headline, right? Well, why is the Dow down 200 points? Well, they're calling it out because of retail sales declining. I'll pull it up on the calendar. As well as, this is the first time we've had a down move in the builders index, went from an 80 to a 75. Anything above 50 is positive, but it's a decline, which is the first decline, and I think it was like 9 months, if I remember correctly, give or take. Yeah, retail sales are down month over month, and over 1% too. So you annualize that, that's quite a bit. So that's part of what they're blaming it on. Same thing happened yesterday though. The Dow was down 200 points. There was a big headline flash. Oh, doom and gloom, whatever it was. And then the day turned around and it was like the headline was never there. And they turned on, oh, look, all-time highs. We're all happy again. Right. So within the day, those things change. It's just amazing. It's like comedy to watch it.
Yeah, I mean, you know, they have to come up with an explanation why the market is down, and then come up with an explanation why the market is up. It just kills me. I mean, I've been watching financial news networks for 40 years, and it never fails. Whenever the market's down, they pull out the bearish guys and they talk bearish. When the market's up, they pull out the bullish guys and talk why the market's going to go up more. So they just kind of mimic what's going on, but they really have no clue.
Right. This one
really have no clue either, but we try to go by the data.
Exactly.
You know, I mean, yeah, we don't know what's going to happen either, but we just look at the data and say, hey, right now there's more sellers than buyers.
This was an amazing notation I found yesterday after the S&P made that all-time high. It's doubled since that pandemic bottom.
Oh,
fastest bull market since World War II.
Wow.
Doubled.
Yeah,
that's crazy. I could pull up just so we could see that a little bit easier. Let me pull up this guy and we'll zoom in on him. Curious to see that in a chart. We'll look at like a monthly, just so we can see that year over year. 4480s yesterday's high. We really got to squeeze around a little bit here.
Toss loves it when you're on Zoom and trying to fix your charts at the same time.
Yeah, you don't even have to go back. I suppose you didn't have to do a monthly, but this shows that the ever such slight incline where this is why you just buy, right? Just buy and hold. They'll take care of you until this happens and you're mad. But yeah, where were we down here? Here's our low, 2191 in March. Bam.
I heard somebody say that if you had bought anytime, like in, what was it? I mean, the last 3 or 4 years, I mean, that low goes back to what, 2016 maybe?
Yeah, there's
no. The low from March of last year.
Oh, yes.
So if you draw a line across there, we could see kind of like where that crosses. It's like 2016. So let's say you started, you know, say you were fully invested in 2016. Well, and you've been holding for 4 years. Well, that 2 months that the market declined had wiped out your entire gains in 4 years. You know?
Right.
And, you know, so there was kind of this, it was an interesting debate whether or not you should be a short-term trader or you should be a long-term trader, realizing that, you know, we do get these anomalies every once in a while, like 2008, 2009. How many years of gains did that wipe out? A lot, you know? So I prefer swing trading. I look at the spreadsheet. I say, okay, is there more sellers than buyers? Does it look like the buying is starting to decline? I'll take a short position, a small short position, and hold it for 1 or 2 days. Then if I see buyers coming in and I see more bullish herding, I see more indications that the market's going to go up, I'll try to buy. I'll buy to go up. I'll hold the position for a day or two and get out. It's a lot. And even at this stage, I trade fairly small. I used to trade much larger positions when I was younger. But, now I'm happy to make, X percentage returns every single month instead of, seeing wild fluctuations in my P&L. So I think it's an easy way to trade. And that's a lot of what I'm going to talk about. I'm going to talk about that specifically in the classes coming up, is just kind of doing real simple swing trades using the spreadsheet and some basic indicators. It's not stressful. You can, you do small positions, nothing that's going to wreck you. And you trade the futures because the tax implications on futures are so much better than trading stocks or trading options or anything else like that. And it's very simple reporting. On your tax return, it's a piece of cake. What's your total profit? What's your total, whatever losses you have, what's your total net profit? You just put it in there and you're done. You don't have to upload sheets, of trades, offsetting transactions on option trades, or try to reconcile those trades or stock trades and stuff like that. You literally have like one line that you fill out on your tax form. It's a piece of cake.
Yeah, definitely. I know the accountants love those for sure as well. They're like, oh, you trade that? Perfect. Thank you.
Yeah. And then you got the 60-40 split on the long-term gains versus the short-term gains. So you got a little benefit on that as well. You take long-term gains on some of those profits. And that makes it even better.
Yes, Tom, we're definitely looking forward to it and happy to see you in the front door. So 2 weeks from today, that will be starting high-level mentoring classes. The 31st is the first day, so set your clocks. Zoom information will be going out for the meetings next week sometime once that gets all set up. But yeah, we got 2 weeks to go. Any questions? Shoot us an email.
Yeah, we're going to show you a real easy way to trade, at least on the swing trading side. Now, the minute by minute stuff is, I think is good. I mean, a lot of people do very, very well with that, and it could be, as long as you control your risk, I think you'll be okay. But another thing we're going to talk about, of course, is the psychology of trading. One of the biggest barriers out of all of the people that I've coached in trading over the years, and I've coached a lot of people in trading, is that they're preoccupied. They're doing too many things at one time. And so if you have your mind on other things, it's very, very difficult to trade successfully. You need to really, if you're going to trade and focus on trading. And if you're trying to do too many things at one time, it's difficult. It's very difficult. And you also need a stable source of income. So, unless you have a very, very large account in the hundreds of thousands, and you can generate enough money for you to live on, you're better off having at least a stable income so that you don't have to worry about whether you're making profits on the trades or not. That's kind of critical, but it all depends on what you want. But you need to have that stable income in order to feel secure in your trading psychologically. Because if everything is riding on your trading, you become biased. You become extremely biased in your trading, and it's very, very difficult to be successful.
Yeah, Tom's mentioned he's got the work from home job, which a lot of people are in that situation now, whether they had it before or not. There's a ton of people working from home that are trading on the side. And it's easy to miss things because you're focused on, whatever you're doing for your 9-to-5 job. And it's like, then the worst thing you can do is trying to jump into it late and chase that trade. So yeah, it's definitely a thing is where, you need to have specific focus time. Here's what I'm doing. This is all I'm thinking about, or that way you're not worried, because I've talked to many people like that too. So I think that's great info for sure. Just some leading insights into what you'll be discussing in on that psychology of trading.
Absolutely.
Well, to round out our session today, we're getting close to the top. Let's take a look at anything that's been bounced, anything interesting. Yeah, it looks like they're trying to recover again. Looks like the NDX had that big gap down. I keep watching this one too, because it's interesting how they like to fill gaps on the NDX. So I wouldn't be surprised one bit to see that guy go back and fill the gap from yesterday's open, right around 15,087 looks like. The open was 15,090. So we're already only 30 points away, give or take. So I wouldn't be surprised at all. But we do see bearish herding's building. So it's not a recommendation to buy anything, because it may not fill, but especially with this bearish herding coming in, there's more sellers coming. So we'll see how far they can push it with the sellers coming. Appreciate it, Tom. Yes. We try to mention things that actually help and work. And as Dave mentioned, putting together what you just talked about, 2008 and 9 was when my attention perked up, saying I need to do something about this because my 401k just got wiped out. 50% was gone. It's like, yeah, I need to find a better vehicle. That's why I turned to the stock markets. I always knew I was going to need it. And then I found the right people to follow. And with your mentorship, I was able to turn my trading into better things and protecting that money. That's the biggest thing too, is once you have it, you need to protect it and not pretend it's just kindling and light it on fire.
Yeah, we don't want to light your account on fire, that's for sure. Yeah, I mean, sometimes just saving money and not getting yourself into trouble is probably going to save you so much. It's like making money.
The old saying of a penny saved is a penny earned. Heard that one growing up all the time. Still true.
Yep, still is true.
All right, I think we'll call it a wrap for today, unless there's anything that you had missed. I don't think I have any missing screens that I was going to cover. So
no, just long-term stuff. We really haven't really seen anything, like I said, that's going to propel this market higher. I guess if they pass the infrastructure bill, there's going to be a lot more money being printed by the Treasury in order to and floating some more bonds in order to pay for that. But other than that, there's not a lot of excitement about the future because we've come out of the pandemic. Although we do have these variants that are going out. We've got 100,000 people a day being infected by the variants now, which is almost back to pandemic levels. So I don't know how that's going to turn out, but that doesn't sound so good. And then we've got booster shots. Everybody who got 2 jabs figures, oh, I'm done. Nope, you're going to have to get a booster. So, I mean, there's a lot of stuff on the horizon. The problem is that what do people have to look forward to? If we do have another lockdown or we do have this variant continuing to morph, you're not going to be able to take those vacations again, and it maybe people are so tired of it, they're just going to do it anyway. And then there's going to get more people who are going to be sick. And then the government's going to have to step in and do more restrictions. So, it's just too many questions right now about the health situation, about the economy, the retail sales are down. I don't know, a lot of stuff going on. And I think that's why the markets are kind of being weird at this point.
Yeah, I think there's a lot of potential either way that they could use for their headlines, whether it drops or whether it goes to continues new highs, right? It's like, oh yeah, infrastructure bill, we're creating jobs, we're building new roads, whatever is going to be in there that hopefully actually helps the infrastructure and not just pork.
Yeah.
But if it turns down, like there's already talk of, are the schools going to open? We got less than a month for some. Some are opening in a week or two here. So within the next week to month, schools will be opening across the country in the US here. And will they stay? Will they go? It's set up for, it could go both ways easily, the way they talk about these headlines.
And, another thing is the dollar continues to rise. We're up 0.5% today, which is a pretty good move for the dollar. What's kind of fueling that, I wonder, So we got a pretty good move. Looks like it's in a continuing uptrend there.
Yeah, definitely for the last few months.
Yeah.
Kind of bottomed out at the end of May.
Yeah. And one big picture kind of thing that keeps coming back into my consciousness and kind of is revisited often when I read things is that during the 1920 stock market bull market until 1929, my impression of that was that retail investors were in the whole time, but that's not true. They actually didn't get into the 1920s bull market until like the last year or year and a half of that market. And they were a driving force of pushing the market up to new highs. And what have we seen over the past year and a half? Retail investors, again, are flooding the market. We know that because all the reports came out, and we've got Robinhood, we've got all these other platforms now. And so once again, it's almost a mirror image. It's very, very weird of the 1929 market. And when those retail investors start to get spooked a little bit and they start to see losses in their trading account, and I'm sure a lot of people have already had losses because the average, here's an interesting statistic. About 80% of the call buying, which is under 10 contracts for retail traders, generally under 10 contracts, is only 7 days to expiration.
Wow.
They're not even buying a 30-day option. They're not buying a 2-week option. They're buying a weekly option that expires 7 days out. And they're basically using it as a lottery ticket. So I'm guessing that the losses to the retail investors over this past, especially past 6-7 months, has been massive by buying these very short-term call options. And nobody's reporting it. Of course, nobody's talking about it. But having retail investors to the extent that they're in the market right now, we have not seen, not even in 2007, 2008, 2006, before the market crash, not even 1987. This is the largest cohort of retail investors in the market since 1929.
Very interesting. And yeah, once they see that drop, they'll be the first ones that panic, right? Because they're not used to market ebbs and flows and activity. They're the ones that get in on this ride because they're going to FOMO. Just look at the Dow itself. I'm sure they jumped out right there. If not, were taken out if they had anything on margin. Yep. And if they're like, oh, we're going back in, then yesterday happens, they probably freaked out because it was almost just shy, 300 points that we were talking about yesterday.
Yep.
Those will move.
Yeah.
Tom says, and now it's easy to get it. Exactly. They're gamifying stock trading. That's what these apps are doing. They're making it easy to sign up. There's less requirements for everything. Yeah, it's definitely making it easier for everyone to pretend to be investors and retail and market people. It's the double-edged sword, right? Everyone should have access to the market, but they should use it with its right tools. That's why we try and help people as much. Say, here's what's going on. Here's how you actually use these tools. Here's how you can be successful. So that's why we help you, Tom. Keep your focus time.
Absolutely.
All right, gentlemen. Appreciate you joining me once again. Tom, as always, we will see you on Thursday, unless you're busy. We'll catch you in 2 weeks for the start of the high-level mentoring. He says, to close it out, a lesson on the horizon is similar to the lesson a lot of people got in 1930. Yeah, very possible. No one can claim or call exactly when it will happen. It is just a matter of time, in my opinion.
Yeah, mine too. It's funny that the market never exactly repeats itself, but it does rhyme. And I think we're seeing some of the signs that it is rhyming.
Yep. The setups are there. The warning bells are going off. SPY VIX has been above that 25, almost hit 30.
Yeah.
So be careful out there, whoever's what you're doing. And if you need help, we'll help you out with exactly what Dave's been talking about. So hit us up and we'll talk to you guys on Thursday.
All right, guys. Have a great day. We'll talk to you soon.